And it's in collectible circles, it's better than the S&P 500. It's better than your 401k. If you're investing in a 401k, you're a boomer, it's going to crash. The only true investment that people are ever going to want in the future are Pokemon cards. And so I have some thoughts on this that I wanted to share, and I put some. Hey, folks, is Pokemon the new retirement plan? So there's been a lot of talk on the internet and on YouTube about Pokemon investing, how it's beating the S&P 500, how it's better than your retirement account, it's better than 401ks. 401ks are for boomers. The real money is in Pokemon. So since COVID, Pokemon has been like the hot investment. So I put together some thoughts on this subject because I think there's a reason you would invest in Pokemon, and I think there's a lot of risks, and I think we should analyze the trade-offs between investing in traditional retirement, or in this example, the S&P 500, and investing in Pokemon. And really, why is Pokemon now becoming a thing that people want to invest in over anything else? Stocks, bonds. So to preface, is a GoClash talk about investing. I am not a financial advisor. This is not finance advice. This is a guy talking into a microphone in a bunker, talking about men and women who are investing in cartoon characters on cardboard. This is just all opinion. All right. So what is my thesis here? What's the point of this video? So Pokemon investing, while it's profitable, it's highly speculative and risky. And so all the discussion points online that are around replacing your retirement or replacing like index fund investing with Pokemon and with collectibles versus like in a traditional 401k or an IRA is just like next level risky. So it is factual. Like investing in Pokemon sealed booster boxes, investing in cards, base set cards, graded cards, promo Japanese cards. I mean, it's factual that in the last few years, like the returns have beat out traditional stock market investing or traditional investing like the S&P 500. Like really, if you bought a X and Y Evolutions box, which is going to be one of the examples we go into in 2016, and you sold it in 2020 or 2021, I mean, you beat what you would have put the same amount of money into pretty much anything else that's traditional. But like with those gains, the narrative is building in the Pokemon community and really the collectible community that investing in sealed booster boxes, modern sealed booster boxes, is actually a better investment than traditional investments like the S&P 500. And I guess better means in the short term, does it produce more gains? That's true. In the long term, is it the best? That's the question. I really think this strategy is fraught with risk, and I'll try to get into that in this video, and really kind of go into let's talk about the opportunity cost between investing in Pokemon and investing in like an S&P 500 index fund. And like I said, they actually do have high returns. So assume, I've seen some other like YouTube videos kind of do these assumptions as well, that let's just assume $100 for a booster box, which is entirely reasonable. Really, for many of the Sword and Shield sets that came out, you're getting them at $100 or less, probably. Depending on where you buy it, you go on TCG Player, you could probably right now get that is a Paradox Rift for like $100, $105, $110, something like that. So I think it's completely reasonable to say, let's just use $100 as the base cost for any sort of sealed booster box from X and Y, Sun and Moon, Sword and Shield, since we're talking Pokemon. In 2016, so if you had the foresight to say, I'm going to buy X and Y Evolutions sealed booster box to hold as an investment, from 2021 to now, you would have nearly 8x'd your investment, meaning it sells for like $800 now. Like if you had bought a case of that, you paid $600 for a case, and you did incredibly well. Even in 2019, if you purchased the Sun and Moon Cosmic Eclipse sealed booster box for investment today, it would nearly 6 to 8x that investment. Like even sets that came out in 2022, even the Sword and Shield sets, some of them you're going to see like you're either 50% or 100% investment gain on your money. Like Chilling Reigns, probably around 50%. Evolving Skies, clearly 100%. There's others that, like Astral Radiance, it's been about a year and a half. Not doing so great, might be 20% ahead after fees and shipping and all that. You're not making any money. But, I mean, there is data showing that recently, within the last 2 or 3 years, yeah, you're doing great so far if you're investing in Pokemon. But, like, how... So why? Why is it? Why did it go up 8x? Is it just natural demand? I think the pandemic, well, I know the pandemic made Pokemon really, really popular. So like there were going before pre-pandemic, there were prominent releases that generated a lot of interest in Pokemon, like Pokemon Go, the mobile game, or Detective Pikachu, the movie. But really like the real inflection point here was the pandemic, which is really just money plus boredom equaled spending money. So whenever we're all at home and we can't go out because there's a pandemic and everybody's sick, or there's a fear of getting people sick, and we couldn't do anything. Since that halted the economy, the government also printed checks to send to everybody to stimulate the economy because nobody could do anything and nobody's working. When people get all this free money just kind of funneling in and showing up in their bank accounts, what are you going to do with it? And that's where the collectibles, everything collectible-wise took off, whether it's Pokemon or Magic or video games or comic books or watches. I mean, you name it, like any collectible just like exploded because of all the money that was being funneled in to these assets. The Logan Paul effect too, right? So social media had a big part of it. So him buying the Pikachu Illustrator or the base set sealed case that ended up being G.I. Joe. I mean, so when younger generation, now I say younger generations, when people in their 20s and 30s who are prominent on social media are seeing all of these kind of gains that are happening from people who are flipping on eBay or going to Target and getting in a fist fight so they can buy things to flip on eBay. I mean, everybody was just making money at this time. It was the cool thing to do. You have Gary Vee talking about how huge collectibles are going to be. So like a Pokemon base set Charizard is now the art. It's the Van Gogh for the millennial generation versus what would have been valuable for past generations. You have, again, Logan Paul, who bought the car. I mean, incredibly popular. In fact, anybody could make money on this stuff. It was really just COVID, the pandemic in general was just the tide that lifted everything up and really sent everything into the stratosphere, Pokemon included. Now, this didn't just come out of nowhere, though. Like, this was already a thing. It just needed the rocket fuel of COVID to get poured on it to, like, go crazy. Like, investing in TCG products, it's already a niche that was a thing pre-pandemic. Especially in Magic the Gathering, which is probably not popularized, but maybe made more aware by Rudy on Alpha Investments, who, has a whole dedicated channel on collectible investments and investing in sealed product. You become a patron and you can buy really whatever you want by the case that he's offering, whether it's Magic, whether it's Pokemon, whether it's Flesh and Blood. I mean, all this was happening before COVID. So this was already a thing. People are already buying these boxes, buying sealed boxes, putting them in their closet, waiting 5 years and seeing how they increased 50, 100%, something of that nature. It's already a thing. But like in all this hype just generated more interest and more people into viewing collectibles as investments. I mean, frankly, this is how I got interested in it. Pre-2020, I did not think of buying Pokemon cards as an investment. It never really occurred to me. Like, I still have all my Pokemon cards from when I was a kid, and I knew they might have some value, but I never thought of them as like, I'm going to buy this thing like it's a stock and it's going to go up 8x and da-da-da-da. Like, I never thought of that at all. And the pandemic is really when I got fascinated into this, and I just started studying and watching videos and seeing what was going on to try to learn, because very fascinating stuff. But it's when Pokemon became relevant as an asset class, as the stock market. I mean, Pokemon Investor is a thing now. Pokenomics is a channel on YouTube. I mean, so it's mainstream, whereas before it was probably a very niche thing. And when you start to get the eye of CNBC and, you know, like journalism outlets, in addition to like new people who get into the hobby, I mean, that's what made everything go up. So I mean, I think all these like insane returns and prices for modern Pokemon is likely just still the effects from the COVID pandemic and the collectible boom. Like we could still be in the boom, even though we're probably a year and a half removed from really worrying about COVID or being under lockdown. I mean, it's something that is probably going to last for a few more years as well, if not maybe another decade. But because of that, it's completely reasonable to assume that Pokemon is still in that hysterical bubble and will continue to be in the short term. I mean, even by short term to medium term, maybe the next 5 to 10 years. It's completely reasonable that these prices will continue to go up and there will still be mania. I mean, even you saw the Pikachu Van Gogh that came out a few weeks ago. I mean, there's still a mania for it, and there's still scalpers that are flipping on eBay for $150 or $100 or something crazy like that. So the assumption is that demand will always rise for these products and appreciate over time. And I think that's a flawed assumption. To think that people who are big into the hobby now will always be into it, and there will always be buyers, and there won't be people who enter in now who are maybe this is a temporary hobby for them and they'll lose interest in the next 5 to 10 years, I think is highly reasonable. Also, the influx of supply, again, the booster boxes pre-COVID, when it was probably less of a known thing that was going on, that people would use TCG booster boxes as investments. Now that it's a lot more mainstream, there's just a lot more supply out there. And will demand continue to outweigh the supply? Now, in 2023, as the time I'm making this video, right, it's November 2023, there's probably people dropping out now. There's kind of a lot of bearish sentiment, but there's still a lot of talk. There's still a lot of people who are talking about this as reliable investments. So, like, here's the risk that Pokemon won't continue to rise in value. How many people in 2016 had the foresight to buy XY Evolution sealed booster boxes in the expectation they would significantly increase in value in 5 to 7 years? I don't think many. Like, nobody would have predicted it would have been 8x. Again, like I mentioned, this is a thing that's been, people have been doing this for a while. It was more niche before COVID. I don't think anybody who bought XY Evolution boxes thought it would be worth $800 in 5 years. But I do think they probably thought they would double their money in 5 years. So to say that this is a can't miss investment, I think is flawed, because again, if it's going to be worth, if you pay $100 for it and now it's worth $200, and by the time you ship it and pay fees and whatever on eBay, you're probably getting 70% on a 5-year investment. I mean, that's really good. But to say that, well, these things are going to 8x in value over time, they're not going to increase at a more reasonable rate. I think Rudy's quoted, like, you should expect 5 to 8% per year appreciation on sealed booster boxes for Magic. So if we take that same assumption, that's probably the people who are buying XY Evolution boxes in 2016 were probably going off of that. It'll probably rise at the same rate as an index fund or the overall stock market. This is just a fun way to do that with your hobby. I doubt anybody in 2016 thought, I'm buying these boxes and I'm going to make $800 on them in 5 years. And really, to say that that's going to happen more in the future, like to say that an XY evolution box will be $1,500 in the next 5 years. What's the data to back that up? Like, none of that data exists. I've been looking all over to see if we can get like long-term price horizon or long-term data on how Pokemon or collectibles in general appreciate over time. I can't find it anywhere. So it's a reasonable assumption to think maybe XY evolution boxes will increase 8 to 10% over the next 5 years. So maybe another 50%. But to say it's going to double its current price, there's no data to back that up. The reason that happened, again, is my premise here is that COVID made everything go crazy and those boxes went crazy. And nobody was really hoarding them because it was more of a niche thing. Now that we have Sword and Shield, where everybody's hoarding these, are these really going to 8x in value in the next 5 years? Probably not. So like I mentioned, there's not enough data readily available that I can find that makes Pokemon a can't-miss investment. And that just all the returns, we're just looking at it from a post-crazy pandemic boom. I mean, there's no data to back up that in 5 years, all of this stuff is going to be worth 6 to 8x, just like it was from 2016 to 2021. Like, nothing shows that. And like, even if we were to try to compare, like, what were the Pokemon returns for the first Pokemon boom in 1999 and 2000? Like, were base set jungle and fossil cards selling for crazy premiums in 2004 or 2006, 2007? They weren't. So there's some anecdotal, like, just speaking with friends and people who are in the hobby, some anecdotes that back that Pokemon's not evergreen. Like, I have a friend who knows way more than I do about collectibles, and he's been dealing in this way longer than I have. And he recalls from like 07 to 2011, 2012, he would go to flea markets. And at these flea markets, they'd have like the base set cards, and they just couldn't give them away. Like, base set packs were for like $1 or selling for $2 a pack because nobody wanted them. Nobody cared anymore. Nobody really cared about Pokemon. The interest was dying. And this was 5 to 7 years after like peak mania. So like, who's to say that when peak mania happens in 2020 and 2021, in 2027, 2028, are we just not going to care about this stuff anymore? Like, because it's so readily available and everybody has it, it would take a third boom to really generate those crazy returns that we saw in the second boom. And also, like, again, the TCG investing was so niche pre-COVID. Like, when you go back to watch old Rudy videos on Alpha Investments, like, does anybody remember the Pokemon bathroom? Like, he literally bought out like a bunch of X and Y set stuff, and he made videos of his giant Pokemon bathroom and this giant stash that all there was his Pokemon XY stuff. And there were just videos about him regretting it, saying it was a dumb decision. This is all before the Pokemon boom. But he's like, I don't know why I bought all this junk, because nobody wanted it in like 2018 and 2019. And it wasn't until the boom happened that it was all valuable. Like, he literally stopped doing Pokemon for a long time because of it. Like, as a patron, I go through like some of the history, and you know, when the Pokemon boom was starting up again in 2020 and 2021, like, it took a while before he started offering it again. And he's like, you know, he thought it wasn't a good thing anymore. And when it became a good thing, he jumped back on the bandwagon. And he had a whole bathroom to profit from. All right, so if we're talking about Pokemon investing, what are the risks that need to be considered? So like I mentioned, recency bias. All the massive returns that people are talking about have happened in the last 2 or 3 years. There's no data to support a long-term track record of Pokemon beating the S&P 500. It's like when we talk about, hey, Pokemon is better than your stash money in your 401k, it's stupid. You should go buy sealed booster boxes because they beat the S&P 500. But what's the long-term data to support that? Like, again, from say we were to look at 10-year snapshots, does from 2006 to 2016, does things that were released in 2006, when we look back at 2016, do they beat the stock market? From 2011 to 2018, do they beat the stock market? I don't know. That data doesn't exist. This black and white that was released in 2010, 2011, were they selling for like 8x, 10x premiums in 2018 and 2019? I don't know. I bet some of the vintage was. I bet some of the base set jungle, again, the vintage stuff that really has the nostalgia for the millennial generation, I bet that sold for a lot. Right now, supply is likely just a lot higher. So are more people hoarding boxes than they were 5 years ago? Again, this was a niche thing 5 years ago. It's still niche, but it's like a way more prominent thing that people are doing. And it's way more open that like this is a thing that you can make money off of. And the demand just has to keep up for this to be viable for growth. And the only way this would stop happening is if people are just fire selling the products they have now, right now. So right now, again, if things aren't great in the TCG investing space, if everybody who bought all these Sword and Shield boxes are now just selling them, and then demand will go up eventually. I mean, I guess that's how the supply would go down. But again, supply's higher. Will demand keep up? I mean, that's the question. And I would be skeptical that that would happen. So another thing I don't think people really talk about is the risk of damage. It's like you have to make sure that you keep it in a fairly climate-controlled area. In your closet might be fine. But like, let's say you live in an apartment complex and the upstairs apartment floods and it floods your closet and damages the booster boxes. Like, what if a natural disaster affects your home? What if you live somewhere with hurricanes or tornadoes and you have a whole closet, $10,000 worth of booster boxes in your closet, and they get destroyed? I mean, these are low risks, but like they should be considered. So like, are you insuring booster boxes? Well, then you have to make sure insurance cost is kind of into the plan as well. Well, no, I don't put in my closet. Like I got a climate controlled storage unit. Well, storage unit's another cost that you have to consider. Like there's other costs that you have to consider. People talk about like when you sell, oh, it's the fees and it's the shipping, but like taking up real estate is a cost as well. Whether it's minimal, like you have a few boxes in your closet, but if you have those damages or if you have things or events that happen that damage these products, that's not going to happen to the S&P 500 index fund that you have in a portfolio with Fidelity. It's just not. It's a risk that I don't hear talked about a lot. It's illiquid. Like you can't really unload all your booster boxes at once. Like you always have to find a buyer. You have to sell in a marketplace, sell the asset, and get your money. It's your time. That's your labor. Selling fees, shipping, taxes you have to report, taxes you should report on the gains. Like if you have an S&P 500 investment, you need $1,000. You can sell it tomorrow and get your money. If you have to liquidate $1,000 worth of booster boxes, you're probably not going to get it for like 2 to 3 weeks because you have to sell and you have to ship it out and got to wait for eBay to like send you the money or wherever you sell it from. It's just illiquid. And so what's the opportunity cost here is, well, instead of buying Pokemon boxes, why would I put my money in the S&P 500? Again, time horizon should impact your decision making on whether you invest in Pokemon or the S&P 500. So like over the last 30 years ago, Pokemon wasn't a thing. The S&P 500 was, and I think if you were to look back in 30 years, you're going to find like the average return is 10% or inflation adjusted at 7%. So every year on average, you're going to get 7% on your money. Investing in Pokemon long term, again, 7 to 10 years, there's no data on like the historical returns here. And investing in Pokemon short term is speculation, and it really depends upon that supply is limited and demand will always outweigh supply for oversized returns. Investing long-term in the S&P 500, you're going to get an average 10% or 7% adjusted for inflation. That's like the last 100 years. There's a track record of why you would put your money in that. And just think about it this way. In the long term, would you rather tie up a large portion of your net worth in 20 or 30 years in mass-produced booster boxes that contain cards produced with forced scarcity? Or would you rather own a small slice of 500 different companies that provide value in the U.S. stock market and that change over time? And just here's an example too. You can go to investor.gov. If you, say you're 25 right now, say you're a youngin', you're 25, you maybe just started your career, you're trying to make some things happen with your money, and you love Pokemon, and you love the fact that you can make money on it. Maybe you already did make money on it during the pandemic. Maybe you were doing some flipping and you made like 20 grand selling things on eBay during the pandemic, and it's been proven that's what you love. Just take the return 7% on your money. Say if you're 25 and you plan to retire when you're 65. Well, no, I'm going to retire when I'm way younger than that. Well, let's just use it as an example. Pokemon might get you to retire early. I hope it does. $420 a month for 40 years will make you a millionaire in today's money using an inflation-adjusted 7%. So just every month, if you put $420 into like an S&P 500 or total stock market index fund, there's a good likelihood that you'll be a millionaire by the time you're 65. And I just don't know that consistent Pokemon investing offer that sort of those type of returns. Now all this has been, hey, Go Class, why are you hating on Pokemon investing? You're giving me all the reasons why it's stupid, and you're saying it's dumb, and that you're wrong. You've been wrong for like 20 minutes. Let's talk about why you should invest in Pokemon cards. Well, you genuinely love Pokemon, and you want to do it responsibly because it's fun and profitable hobby. I mean, that's completely reasonable. It's completely reasonable to say, this is this side thing I do that makes me an extra $5,000 or $10,000 a year, and I just love doing it. And it only occupies a small portion of my net worth. So like if it all went to zero, it's not going to affect me, but it's a fun thing I do. That's completely reasonable, and like I think is entirely a good reason to do it. You want to sell appreciated items to add more rare and desired pieces to your personal collection. Like I think that's completely reasonable too. Maybe you're a collector and you have all of these cards and you want to sell part of your collection to buy like a way rare or a way nicer thing to add to your collection. That's entirely reasonable. I mean, that makes sense as to why you would want to invest in Pokemon. You've invested in cards that might be worth $2,000 now. You can sell it for $2,000 and buy something that is worth $2,000 that's more special to you. Maybe like a Pikachu Munch or something like that. You want to diversify your investment portfolio. Assuming you could take on the risk, again, this is all opinion. It's not financial advice. The GoClashian opinion here is that no more than 10% of your net worth should be tied up in risky assets. And collectibles and Pokemon would qualify as a risky asset. So you want to diversify up to 5, 10%. Some people even say 20. If you want to diversify your portfolio in collectibles, that's entirely reasonable to do because you can make money and get outsized returns from doing like stock market or real estate investing. And invest because you'll have realistic expectations on TCG investing. So like Rudy mentions in the past, in normal markets, TCG investing will average you like 5 to 8% a year. Like the reason you do this is because it's more fun than investing in bonds or in stocks. And really, unless Pokemon has another crazy boom or becomes established, like something like Disneyana that has been around probably since the 30s or 40s and attracts collectors, there's little precedent that today's modern boxes will be worth anything in 20 to 30 years. I think it's more likely that the first base set, Jungle, Fossil, Team Rocket are going to be things that will probably always be fairly evergreen, if anything will be in Pokemon. But there's just really no precedent saying that the Sword and Shield sets, the Sun and Moon are going to be really worth anything by the time you're in your 50s or 60s or 70s. All right, so in summary, is Pokemon investing better than a 401k? In some respects, yes. In some respects, no. If it's something that's short term, within like 1 to 3 to 5 years, and you want to make a little money, it could probably work. It probably will work. It's going to be more fun. But when considering, should this be my retirement plan? Should I, instead of investing in a 401k, should I buy Pikachu and Charizard and Sword and Shield boxes? I think that's an entirely different animal that is like that's way riskier of a proposition to really act upon. That's my opinion. Let me know what your thoughts are in comments below. If you like the video, please like it too. I don't get a lot of those yet because it's my 5th video. But I think it would be helpful. And again, leave a comment if you have an opinion. Do you agree with me? Do you disagree with me? Is all your 401k in Pokemon? I don't know. All right. Well, hey, thanks for tuning in and staying in this long. I hope y'all have a great day.